Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis update of commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. I'll interject my financial opinions as we go through it. And if you need any help with anything, check out findinghappyvalue.com. That's where I dive deeper into all of these different topics, sectors, looking for potential investment opportunities. I do a lot of trainings where people ask pretty deep questions, and I go through and share my opinions about those questions. So if you want to sign up, we have a May Day coupon code that is still active to get you 50% off the first month if you want to try it on the monthly membership, just the first month, and then larger discounts on the yearly membership if anyone wants to switch from a monthly to a yearly or go directly to a yearly membership. All right, let's dive in. Let's take a look, see what's going on. We've got the dollar here, and it continues its move higher in the dollar. Up, 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 up. And that is being driven by interest rates. Interest rates are moving on up. Now, the big question that I have is this a new trend where we continue higher, or are we going to come into this resistance and roll back over? To roll back over would mean that we probably need some sort of slowdown in the market, and that is very well a possibility. If the market is going to continue higher, that means that maybe inflation is worse than what most people perceive, and it will continue to work its way on up. So I don't know what the answer is here. We'll find out here over the next few weeks. The 2-year yield continuing higher. That is a breakout. It looks like it's good to continue on up, looking pretty strong. And again, we're in the same situation as the dollar. We've been heading higher here. Is that a short-term move where we are going to roll over against resistance? It's a breakout back test where we roll on over, or is this a new established trend where we're actually going to break upward to new higher highs? Don't know yet. We've got the 10-year yield continuing on up, and that momentum is still behind that movement. And then the 30 years also heading higher, and that's clearing this upper resistance level here, where we could start to launch to the upside on the 30 year. That still looks good. We've got big buying pressure, small selling pressure here. It still looks good to go higher. TYX TNX ratio continuing to head lower, and that is going to impact gold and silver at some point here. We've got the yield curve inverting. We've got the dollar going up 0.3% and interest rates going up. So we could see that movement impact precious metals in a negative way. TLT bond prices down a little bit. I mean, that's as expected, and we are breaking this uptrend line to the downside here. We could see a lot further fall in bond prices, and we could see much higher interest rates. That is on the table with the current momentum and the way that these are breaking through support and falling. The 2 and 10-year yield, it looks like it wants to reinvert. What it looks like we have here is kind of a falling wedge that's almost being developed. So big move up, smaller selling pressure here. It's contracting into like a corner of some sort. And maybe we break to the upside here. And this is where I think a lot of people are getting messed up. They think that this is just going to drop like a rock. I think Snoop Dogg said that, right? And when that drops like that, that's your recession. That's your slowdown. Now, if we reinvert, this is going to get real interesting because a lot of people might be mispositioned for that. And this looks like it wants to go up. We have a bullish engulfing. We've got small selling pressure candlesticks coming down, and the big buying pressure is here. That looks good to go higher, not lower, in the short term. And we'll have to see how much momentum it generates and builds. Let me throw a trend line in here real quick. We're still below this trend, though. We're still below the trend, but we're going to try to bust through it and see if that occurs. I'll leave that trend line in there. Gold down $30. It is a bearish engulfing. Now, here's the tough part with these guys. We rip up, and in gold and silver, especially silver, we can get these signals like this, and it could go sideways for a little bit or do a consolidation. but it can also reverse quickly to the upside during these moves. So we do have a bearish engulfing today, and that generally indicates sideways to maybe slightly lower movements. And we'll have to wait and see what follow through we get over the next few trading sessions. But that is a negative candlestick at this current time. We received one here, and this was the pullback that we got. It was a kind of a flag pattern. We could get another something like that. We have to wait and see what it looks like. Silver also getting another bearish engulfing candlestick here. This is the dangerous part, guys. If you try to play this in the short term, you can get burned here. Yes, it is a bearish candlestick in the short term. It can go sideways. We can come back a little bit. I'm not playing that move. We are on top of all the big support levels. We've broken out of this guy. We've broken out of this guy. And we have a little bit of selling pressure today. And I would wait to see what it looks like over here. I'm not going to sell anything anyway. Even if we get a larger pullback like this, I still think we're going higher. The bigger, longer-term picture is still intact for a move up. And it could be gigantic. Platinum right at that resistance level, getting resistance. It's not a huge reversal candlestick or anything like that. We're just getting some resistance right at that trend line. So we're going to try to break out here. Let's see what happens. It looks good. Palladium also getting a little bit of selling pressure today. And it looks like we're kind of squeezing up in this section there. And maybe we can eventually work our way on out of this to the upside. Still above a bunch, still above all the support, still looks good. GDX down a teeny bit. We are down a little bit in GDXJ. These are not reversal candlesticks. And down a little bit in SILJ, down 2.3%. Don't get discouraged. Just be patient. We have momentum being generated to the upside, and we're going to hit some resistance up here. So know that we could trade sideways, we could loop around, we can do all sorts of stuff here in the short term, but that's not a reversal candlestick. XAU to gold ratio, we're down just a little bit. A lot of the times what we do is we break out, and then we can do a retest. A lot of companies have broken out of big patterns. A lot of companies. And what people do is they think that this stuff just goes straight up. It doesn't. That's what makes things difficult in the markets. It plays with your emotions. We could get retests of those big breakouts. So patience, guys. Patience is what makes you money. This big downtrend line's been broken, and we're at a very low level with a ton of valuation runway to run against gold. This is where the gold and silver mining companies can run against gold. So we're positioned perfectly. Don't mess it up. Don't mess this up, please. Big move can come. And when we break out, we generally get retests. That is what I think we're doing in a lot of these companies that I see across the board. Crude oil is down about 1%. I know a lot of people are bearish on crude oil. This is not a bearish setup. It still looks good to go higher. We were down 1%. It's just a little bloody nose candlestick. We'll see if we can generate momentum to the upside. The fair value based off the dot plot is $86 a barrel. There are other problems in the Permian with water coming up. So I'm not bearish oil, guys. I am not bearish. And even if we fall in the short term, even if we get a little bit of a hiccup like that, I would say that's a buying opportunity. That is me. And how do I know that? Because the gold to oil ratio is low. It is super low. And I might be wrong in the short term, but all I have to do is wait it out. Because the valuation at these levels, we can't stay at 70 and increase production. Demand is going up, not down. Keep that in mind. And supply has been relatively flat. We've been experiencing deficits in the inventory levels and production versus, demand versus production. It'll come. Gold's been ripping, and oil's going to follow what gold does with the lag. TTF gas up 1.65%, looking like it's breaking out. Looks good. Looks good for TTF gas. Natural gas in America is also up, and we're bouncing off that support level I've got in here. Opportunity. You're going to see me start to do I'm going to throw down some buys probably tomorrow. I think the money clears tomorrow. And I'll show you guys on the website, what I'm going to buy tomorrow with this. That's what I'll say. XOP, yeah, you know me. It's still poised above the support line, guys. We haven't lost that yet. Don't give up. We've got a little wick on the bottom. What does that mean? Why do I care about wicks on the bottom? Wick on the bottom here, turning point. We look for these wicks. A little bit of buying pressure there, a little bit of buying pressure here, a little bit of buying pressure here. Wicks at the top indicate that there's selling pressure. There are people who are still in here buying things up throughout the day. The trend reversal moves towards the end of a potential breakup like that. That's what I mean by the wick at the bottom. So I'm looking at this and I might take some entry points. Think of this as a breakout retest, and then you squeeze into that retest. That's kind of how I view things. The sentiment in oil is complete crap. That's when I generally get tingly and want to buy something. OIH down a little bit too. Now, I have to admit, we've broken through some uptrend lines, and we could see further downside. That is still a possibility. Your best entry points are always the ones that look kind of murky, and then it takes experience to kind of tell with some degree that you're getting real close. One of the things that I see is the kind of big selling pressure. This is a inverted flag. We sold off, and then we bounced back up. There's still some sellers in this though, and now we're kind of squeezing up, and I'd like to see a big green candlestick show up sometime. That would give me more confidence that we could potentially be turning to go up. But right now, still looks a little bit weak. Newcastle Coal Futures, remember that TTF Nat Gas, we're up 0.7% right underneath resistance. What do we want to look for? Well, you're going to come down, you're going to fall. You generally base out, and then what you start to see is you start to see a low with a bullish engulfing, bullish engulfing, bullish engulfing, bullish engulfing, bullish engulfing. Those are all bullish characteristics. The lows are starting to come up. I don't know where this low will eventually come in, and then we're going to break. The coal companies have already broken out of their downtrends, and they are sitting on top of support, which means that people are positioning in the equities right now. Does that mean that you should be positioning in equities? Well, that's up to you, but I would be. And there are a couple of really good entry points in coal right now that I would take advantage of, in my opinion. Sprout Physical Uranium Trust is pulling back from that resistance line. Is this where we all need to go cry mommy and go on Twitter and start posting why uranium's bad and we have a 5 or 10% pullback? No, that's guys, don't do that. Don't do that. We're in a big flag pattern. All right, big flag pattern. There it is. We're right up against resistance. Just be patient, guys. Just be patient. Wait for this to loop around. It'll break. Give it time. All the big major trends are turning in favor of commodities. And this is a game of it's like running a marathon, guys. We're not doing 100-meter sprints here. Marathons want to grind you out. So we get these big breakouts. You squeeze into a corner, big breakout. You come on down in a flag pattern, then you get a big, huge break. You can't get frustrated or discouraged before the big break. You got to get excited and be buying in these corners here to drive it on up. Uranium price moving sideways for the futures pricing still looks good. Still looks good. Everything looks good. We've got URA down a little bit more selling pressure here. What does this look like, guys? You guys should know this if you've been following the channel here. We're coming on up. We broke down, had a little detour, had this nice little cool little double bottom. People stole shares down here if you got it. This was your entry point there. Then we came back up. We've broken the uptrend line, and we're back above it. Support by the support level. Yes, that's what I would do. URNM doing something very similar. It's just underneath it. So we hit it as resistance, came on back, and we're going to probably create a higher high somewhere in here, is my guess. URNJ also pulling back. This is just a more amplified move in the juniors versus URNM and URA. But still looks okay. Just be patient here. We've got support going across there. It might come all back like that. We've got copper. Copper down a little bit. We've broken the trend line to the up, or the pattern to the upside. And we got a little bit of selling pressure here. Does that mean that we bail? It's a bearish engulfing. Oh no, we need to bail. No. Time out. Let's look to see what we get over here. If the buyers step in and we start getting big green candlesticks, one that look like this or like this, next to this, or if we gap down and then put a big fat green candlestick like a bullish engulfing or bullish piercing, we're still good to go. This does not weaken this falling wedge and breaking out. I think it still looks very good. We've got COPX also right at the tip of this corner. I know how guys like to play just the tip there, so it looks good. Looks good. Let's see if we can get some buying pressure in here. Iron ore up 0.3%. We are squeezing in iron ore. God, I want some iron ore. Give me some iron ore, baby. So that's squeezing too, just like all the rest. This also has a big Livermore accumulation cylinder. Opportunities down here, guys. Opportunities. Don't let these negative days get you. Don't let it phase you. You're a commodity buying machine. All right? Commodity buying machine when we get these patterns like this. Great entry points. Now, could it dip? Could it give you a head fake? It very well could. But is it going to head fake the commodity bull that knows what's coming? No, it's not. Aluminum up 0.8%. Are we getting jiggy with the line here? God, look at this. We're playing on that line. That resistance line just keeps hitting us in the face, smacking us. But you know what? Shoulder, head, shoulder. Let's rip, baby. Aluminum's going to rip higher. That's my guess. Give it some time. We're right at resistance. Nickel down 1.22%. Oh, I thought you said it was going to go up. It will. Calm down. These are smaller candlesticks. So if you look, big move up, and then 3 days down. The buying pressure is stronger than the selling pressure. Just give it time. Give it time. It'll work its way on up. This is good if you're a buyer in this section there. Moo down a little bit. Do you notice all the small red candlesticks? You notice we got support underneath us. We've broken out of the falling wedge. Yeah, guys, now's the time to locate the sack and use it here and get some shares when we get back to the support level. That's what I'll say. Emerging markets, see that small little red candlesticks? We have this big, powerful surge. Higher low, higher low, higher low, higher low. Boom! Out of resistance. And then for some reason, the markets always want to come back and tag that and give it a high five, a little high five to that resistance line, saying, see ya, man, see ya, wouldn't want to be ya. KRE right up against that resistance area, trying to break out. This actually looks like we might come back a little bit. That is a stronger selling pressure move right into resistance. We could see another, move down here. TAN down a little bit. Doesn't like those yields. Dollar. Neither does lithium. This is an interesting setup here, actually. Could we get a move lower again down here? I hope we do, guys. If we do, I'm going to load up on those awesome lithium equities. I hate to say it, but from this move here to here, some of those lithium equities almost went up 100%. It was like in no time. REMX also getting a little bit of selling pressure. This one looks still well composed. Big bullish engulfing, smaller selling pressure. It still looks like it's hanging on. So lithium might also have some hanging on capability. Baltic Dry Index getting absolutely slaughtered here, down 4%. Looks like it's sell Baltic Dry Index day. The dry bulk companies are pulling back, and I think they're coming back to potential buying opportunities very soon. I'm getting again the tingles. I'm getting the tingles for the sprinkles, if you know what I mean. XHB, those yields, guys, those yields are hurting this. Now we're back to support. You can see the candlesticks. When you get to support, you get big selling pressure candlesticks. Then they start to tighten up here. Is this just a retest where we're going to break back and go, kind of like a slingshot, or is there staying power here, where the interest rates continue to tear it up to the upside and we see further downside? I can say this: we broke upward for a reason. We came back, we started to try to run, and then rates rocking higher rocked the home builders. But it's also rocking the overall markets. Russell 2000, a little bit of buying pressure, a little bit of wick at the bottom there, but there's some selling pressure, a little bit of momentum built. We are coming back to that kind of breakout level coming across here. So this could be a potential bottom. We'll see. We'll see what rates do. I think a lot of this is dependent on rates. SPX getting kicked in the nuts too, down 0.92%. I don't like it here, guys. I don't. I mean, yeah, it's up in no man's land, nosebleed levels. But whenever you start squeezing into corners like this, and then your buying pressure, the green candlesticks start to get real small, and then your red candlesticks start getting bigger and bigger. This is, I don't know. It looks like a top to me. But the way they're printing money, I can understand why this could continue higher because no one wants to buy bonds. So that money's got to go somewhere. And that somewhere could be the S&P 500. So it's sloshing around in the system all over the place. NASDAQ down 1.6, breaking to the downside on a pretty big down move. That's not looking too good either. We have a false breakout to the top, ripped all the way across the entire rising wedge. Came back up, bearish engulfing, big selling pressure, big selling pressure. Came back up with small little green candlesticks, small little green candlesticks. We got red army showing up all over the place here. It looks like it wants to turn to me, but maybe they're going to hold it up here for the election. I don't know. SMCI pulling back a little bit, still looks like total dog crap. I wouldn't put dog crap in my mouth, and I wouldn't put my money here either. So I don't know. I don't like the way this looks. Usually, when you get these big pullbacks like this, you need a little bit of time to bump and grind a move lower and bump sideways, base out. Nvidia getting some selling pressure. This is still looking okay. It's still working its way on up. We'll see what happens there. Bitcoin selling off. We're right at the resistance support level. Again, we'll see if this holds. This is all dependent on interest rates, the NASDAQ. Bitcoin, I don't think likes an increasing interest rate environment. That's where we got that big pullback in 2021. This guy here, that big pullback was interest rates. So this very well could be a move lower if interest rates keep jettisoning on higher. And then Ethereum's down 4.2%. That also doesn't look all that great. Let me back out and take a picture here of what this really looks like. Part of me thinks that if this is, and I don't know if it is, this could be the ultimate top. And this whole area here is one big gigantic bull trap. It could be. I'm not saying it is. I'm just guessing. If that's a bull trap, we could come all the way back to very low levels. It could be a distorted Batman pattern too. Good old Batman, where it heads lower. But again, this could be premature. We haven't broken out yet. It's still premature. Things still look like it could recover. So we'll see what happens. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Mayday coupon code MAYDAY. You got to type that in, the coupon code, to get that discount if you want it. The overall markets, yeah, we're pulling back. It looks like the S&P 500, NASDAQ, they're not looking too hot. Could that impact our commodities? Could. It could. It could drag everything lower depending on how much leverage is in the market and if it continues to go down. Precious metals, a little bit of selling pressure there. We'll see what the follow through looks like, if there is any. So right now, cool, calm, and collected is what I would say, and just wait and see what the data tells us over the next few trading sessions. But that's what I've got for today, guys. So we'll catch you next time. This is Finding Value.